If Trump administration can print about $3 trillion, why can't Indian government resort to the same thing, print more currency and give in stimulus what you're talking about? Why Indian establishment run by everybody else is more worried about what agencies, rating agencies would do by sticking to only 3% of the deficit, what is happening? Why can't India resort to, you have been RBI governor, why can't India for a temporary period print more currency rather than what's Shankar here affected by reform agenda, and he's also part of that thing. Okay, we should not print a currency, but we should create some kind of SPV where somebody, family silver can be sold to others and then it can be the resources. But why can't we go for that kind of objective? What Trump has done, what Sunak is doing in UK, what the other European countries are doing, their deficit much more higher than what India is reporting now. What's the dilemma there?
I mean, to some extent, the dilemma is that we are still an emerging market. Our institutions are probably not as trusted as the institutions of the West. And, historically, when you've looked at debt sustainability, the debt sustainability of emerging markets has been significantly lower than that of industrial countries. That's one reason. So we can't go to the same levels of debt that they can with the same confidence that the markets will not back up and get scared. The second reason is inflation is high in India, right? And your ability in the central bank to absorb huge amounts of government debt is easier when inflation is really low, interest rates are close to zero, and money looks like bonds. So in that sense, there's no difference between the central bank financing and the government financing through bonds. With inflation being much higher, it is much more risky to have central bank financing, especially putting a lot of money out there. So what we're seeing the RBI do is really expand its balance sheet, but largely to absorb foreign exchange reserves. Some of it is devoted to buying government bonds, more government issues through the open market operations, but there's a limit to which it can do that. It can only be a temporary stopgap arrangement because we already have high rates of inflation at 7.5% or so. And you look at the policy rate, which effectively is about 3.5%, because the policy rate is the reverse repo rate. We have a real interest rate, which is -4 at this point. That's a very, very low real interest rate. So the RBI's ability to do more at this point depends to some extent on how inflation turns out. And, I think it would be better to follow Shankar's perspective, use the RBI's support for short-term financing if necessary. RBI is essentially intermediating between the banks and the government, but for longer term, it should be the issue of bonds, but better still the sale of government assets, which it has claimed it wants to do, but we've seen very little action on that, even though markets are touching highs once again.